So we're going to talk about a few things today. Among them, just to understanding there's a diverse group in the audience. So I'll take you through a little bit about the overview of what is crowdfunding, the different ways to do it. You've probably heard the buzzword, but maybe not have dived into really the meat of it. What types of platforms are out there, amongst the different classes of crowdfunding. What you should know from a statistical standpoint, how big is the industry, how much is the industry growing, where is it being done. Some success stories, more importantly, what do you need to do to host a successful crowdfunding campaign? And then where we stand. Everyone wants to hear about legislation, SEC rules. I say that obviously tongue-in-cheek, but I'll mention a little bit about the updated landscape, what's happening with the Jobs Act, and what the future holds. So before I do that, introduction, Anson, I appreciate it. It was great. I wrote it myself. I guess it should be pretty descriptive. He mentioned worked at the Technology Accelerator. When I say Technology Accelerator, I don't know how clear that is to a lot of folks. There's accelerators and there's incubators. There's a lot of different ways to do it. Accelerator in the startup space is kind of a standardized term. It's small amounts of capital. We gave $25,000 to each of our teams. We took a share of the equity in those startups. And then we put them through a pretty rigorous, we call it almost like a startup boot camp. Talking about the world of no business plans. They were figuring out their business plans, right? It's kind of getting dressed as you're running. So did that for a couple years, helped build the program from the ground up with the help of not only the New Jersey Economic Development Authority, but angel investors, universities, VC firms as well. So very well-versed in that space. Founded a couple of startups myself. One I'm working on now is actually moving more into the realm of crowdfunding, kind of building communities within specific industries for the purposes of crowdfunding new innovations. I've mentored dozens of startups, even beyond the portfolio companies that came through our program. University professor usually is not as interesting a title. This is actually the first year I had done it, partly because of my experience at the Accelerator. And really what we did, we took over 500 freshman engineering students, right? So you'd think they were all entrepreneurial minded. At the end of the day, we heard from many of them, hey, I don't want to be an entrepreneur. So we shifted the focus to thinking entrepreneurially, if you will. But the main takeaway from the course that we had run, so you figure 125 student teams of 3 or 4, create your own innovation. Over 30 of the teams actually listed their new products, their new innovations on Kickstarter. Okay, a few of them raised a few $1,000s. One of them raised over $10,000, which was their goal. And they're building their innovation in an incubator at Stevens over the summer. So some definite relevance there. Spent 6 years sales and marketing, actually in the financial services industry as well. So I like to think, as much as I wasn't a financial advisor, see it, the crowdfunding world from the financial services space. It is a scary prospect, and we'll get into that in a little bit. And I think almost most importantly, I'm an active crowdfunder. So I've participated in over 40 campaigns myself. Could be $10, could be $100. I've gotten free tickets to events and to shows. I've gotten T-shirts, stickers. Sometimes I just get the satisfaction of supporting something I believe in. So I'll get into the logistics of that later. So crowdfunding, right? What is this all about? Interesting in the conversations I had beforehand. You forget when you sit where I am how new this space is, how very few people actually have practical experience with it. So my hope is that we can dispel some of the myths and fears about what it actually is. So I like to think that much as anything else that's being innovated and developed, it's grounded in concepts that we've known since the dawn of human history, right? So kids pooling their money together to buy a bag of candy and all splitting, getting a piece of it on the back end, okay? There's IOUs, lending your friend some money in the expectation of getting paid back later on, donating to a church or a temple. And then, of course, we're very familiar with Wall Street. The concept of equity funding in general is not a new concept, but these are really the 4 main realms of crowdfunding. There's others like royalties, but I'm not even going to get into that. So when you hear crowdfunding, there's 4 ways to crowdfund. And in fact, the most popular ones that you hear about, which is the rewards and the equity, are actually the smallest markets of any of them. So I'll get into that in a little bit. But so what happened, right? The internet happened, as it happened with so many things, but the concept here is scalability, right? So commerce became e-commerce, meeting with friends became social networking, right? The idea, though, is we're dealing with larger quantities of individuals, more people. As the great poet Christopher Wallace once said, "More money, more problems," right? So there are definite practical challenges when you get into crowdfunding, which I'll address very briefly here. First on most people's mind when I talk to them about crowdfunding is, this is a brand new market. Everyone's going to get taken advantage of, right? So fraud prevention is a major concern, and I can tell you it is thus far in the 5 years of experimentation kind of in the crowdfunding space has been almost non-existent. But we're talking early adopters, right? So keeping fraud under check is a major concern, not just for the SEC, but for anyone who's looking to get into crowdfunding in general. So who here, has heard of Facebook and Instagram and all these multi-billion-dollar exits? That's a problem because it sets a ridiculous expectation for, what you're actually going to get out of the funding experience. Rewards, this is not as big a concept, but certainly on the equity side, as we look to get into this, everyone thinks that they're going to give a little bit of money and they're going to buy their yacht on the back end, and that's just not the case. So managing that expectation is extremely important and a major challenge, as is investor education. Like I said, came from the financial services world. The amount of disclosure and explanation that is required when you're selling financial vehicles that have been around for decades or centuries is enormous. So you can understand the challenges when you're talking of a new innovation and investing in startups, which at the end of the day, experienced venture capitalists get wrong most of the time, right? Investor fatigue is another problem. The more you do it, how big can the market sustain? Regulation, right, which is where we are right now. So how do you do it in a way that not only protects investors, but doesn't stifle the ingenuity, stifle the opportunity that is this new marketplace, right? And then, of course, IP protection. You hear a lot. Steve mentioned execution is key. That's kind of our buzzword in the startup space. Doesn't matter how many people know. In fact, the more people you talk to about this thing that you haven't yet built, the better. Getting practical feedback, but there is a concern. Once you put it out there, theoretically anyone can copy that. I'm telling you from experience, but also from talking to tens of thousands, or I should say, hearing from tens of thousands of different perspectives on this case. Execution is key. Just because an idea exists doesn't mean that everyone's looking to steal it or use it or do it, but there's still a legitimate concern there. So it gets into the question of why. Anyone know where this quote is from? Call it out. Field of Dreams, except for the fact that that is not the quote, right? So it's if you build it, he will come. And Ray Kinsella builds a baseball field and ultimately has a catch with his dad. And this is kind of the mantra, if I build it, they will come. And unfortunately for many entrepreneurs, if you build it, the only people who care about it are your parents, is kind of the likeness I make. So one of the most important realms of crowdfunding, particularly on the rewards crowdfunding, okay? Market validation. Okay, Steve really jumped into this, and it's great. It's absolutely essential. Why build something if you don't understand if there's a market that is out there for it? Are people willing to pay for it? Sure, you've talked to 100 friends who love the idea. Until anyone pulls out their wallet and actually invests, it is, as far as I'm concerned, a meaningless idea. So market validation, especially on the rewards crowdfunding side, I think is one of the main reasons you would do this. And as a marketing guy myself, it is an enormous opportunity to get this kind of feedback in real time and either change your plan or stop what you're doing and don't quit your day job even before you get going. Fundraising gap is another major concern. So again, Steve really did a good job of framing the investment landscape. But I look at a fundraising gap in two perspectives, right? So if you are a young company looking to raise money, there's friends and family and fools, and then there's angels and VCs. At the accelerator, we always saw ourselves in between there, right? We give a little bit of money and help bridge that gap, but at the end of the day, if you need $100,000, $200,000, $300,000, especially before you've proven that your innovation has value, there's very few places to get it, and crowdfunding has really helped to fill that gap. On the interesting side, and I'm going to talk a lot more about debt crowdfunding, there are vehicles out there that are your go-to funding option when the banks tell you no, when other people aren't able to lend you the kind of capital that you need. So Fundraising Gap really comes on two sides there. Better deals, I talk about debt financing, but there are other people, beyond the SBA, beyond banks who can loan you money. And a lot of times these platforms are really there to disrupt these industries, right? So the interest rates are low, the criteria that they use to evaluate your creditworthiness are different than just a credit score alone. So there are other ways to do it. And then, of course, is the idea of power in numbers, right? A lot of people with a little bit of money can make huge change, and I'll give you some examples of that. On the investor side, though, so these are why you should do it in general as a company, but why do I do it as an investor? I mean, for the most part, it's emotionally rewarding, right? I get to support something that I believe in personally. I mean, this is the crux of crowdfunding, I think, up until this point. It's not so much a speculative investment, especially since the equity side is really just fledgling, but I support a band because I like the band or they're friends of mine, right? I want to give them money. Getting something in return is not usually the reason or the motivation to do it. It's cool. King of Cool, Steve McQueen. I like the image. Wasn't sure how smoking would go these days, but you get the idea. So being on the cutting edge, being a leader, a thought leader, somebody who takes a risk and makes something happen, I mean, this is why people become entrepreneurs in the first place, right? And to a smaller extent, you really get to share in that experience as an investor, right? Become a champion, become the early supporter, and help bring something that doesn't exist to life. So as I mentioned, I want to go through some of the platforms. I'm going to skip over almost completely the donation side of it, the charitable giving. I'll give you some of the players, but is anyone here running a nonprofit or trying to raise money for a charitable cause? That's what I thought. All right, so rewards crowdfunding, okay? You know the players in the space. There are literally hundreds of them out there. Kickstarter is not just the biggest name in rewards crowdfunding, it's the biggest crowdfunding platform in the world by not even a close margin. Just last year, $480 million were raised for companies who were fundraising on Kickstarter alone, right? So a massive opportunity. The concept is the same pretty much for all of them. It's money for stuff, something. It might be a pat on the back or a handshake, a t-shirt, a pre-sale of the product that you're buying, some money can't buy experiences, as I say, right, for the large donors to give them an opportunity that they wouldn't otherwise have. The founders hold on to the equity. What I think is the most interesting thing is that in general, rewards crowdfunding is somewhat small, right? About $7,500 is the average raise, depending on who you talk to, even less than that, right? So the average campaign has about 100 backers. You're talking $75 a person, okay? This is not massive investments, and yet the impact is huge. Just a quick note, so not all platforms are the same, right? So I saw in some of the questions that we were preparing for afterwards, what are the general terms? There are hundreds of platforms because there are dozens, if not more, ways to structure some of these rewards platforms, right? Kickstarter, Indiegogo are kind of all or nothing. You either raise it and take the money, or you don't and give the money back to the investors. Rocket Hub is an exception to that. You might aim to raise 10,000. If you only raise 6,000, you still get to keep the money. So there's different nuances between them. Something that is consistent amongst them all, though, over 50% never actually reach their goal. Okay, so it is a rational proving ground for, does this innovation, does this concept, does this play, this theater production, this new album, does it have legs? Do people care about it, right? So a great way.
Is that just saturation?
It's saturation, and there's a lot of crappy ideas out there. There's a lot of, I mean, at the end of the day, everything I want to talk about, and I set this up later on, crowdfunding doesn't make you better at running a business. It is a tool. But ultimately, you have to build something that people care about, that they're willing to pay for in general. You have to appeal to them emotionally, and there's a lot of people who just don't know how to do that, or aren't thinking the right way, or built something that their friends and them like, but nobody else really has value. So I think that's really behind a lot of why so many of these things fail. But actually, I just yesterday, so I mentioned our startup is looking into the crowdfunding space. We don't want to build our own platform. So I was talking to a friend of mine who's actually the co-founder of Rocket Hub, which is the third largest rewards crowdfunding platform out there. And he was telling me that they were approached by LeVar Burton, a Reading Rainbow Star Trek alum, right? He was considering raising money on their platform. He eventually went to Kickstarter. The platform doesn't matter, right? The fact that LeVar Burton was looking to raise money was the reason that he was able to raise $3 million for a Reading Rainbow revival of some sort, right? So it didn't matter where he was going to do it. He brought star power, right? Joe Blow from the street could have also tried to raise $3 million for Reading Rainbow, wouldn't have worked, and it doesn't matter the platform. So I think that has a lot to do with it as well, influence.
I heard that story about the Reading Rainbow guy, but the thing is that many people that invested that thought that Reading Rainbow was going to be revived.
Right.
But it's actually a program that he's building that is similar to Reading Rainbow. It's not actually
Like going into the schools and things like that, yes. I glossed over the top end, but yeah. But if he had the brand name, absolutely. Misunderstanding and misinformation, huge concern, right? Everyone has, everyone reads the same articles ultimately, and you have multiple different perspectives, even from the same facts. So no different really with crowdfunding. So I want to jump, like I said, donation. I'll just get this very quickly. Hundreds of them. One of the largest crowdfunding platforms. This is all legal. This happens today. People raise millions of dollars for charitable causes or for medical research for individuals. You feel good. It's peer-to-peer. It could be free, like you caring. It's completely free. They monetize in other ways. So it's a great way to reduce overhead and kind of bypass the large infrastructure of a traditional nonprofit, charitable donation platform. So debt. Okay, so we talked about debt, financing, and kind of a traditional startup. But as far as funding businesses, right? So I want to talk about these three platforms in particular. Again, there are hundreds, right? There will be consolidation, but at this point, everyone's taking their hat. Everyone has different models, okay? Completely legal. You can borrow money from any of these sites right now. In fact, Lending Club does a lot of specialization with businesses that haven't been around for 2 years, like the SBA requires. You can prove your creditworthiness through not just your credit score, but how many followers you have on Facebook, how many Twitter connections, how many LinkedIn connections. Import your QuickBooks and actually take a look at financials. Not only that, some of them will give you results and approvals within minutes, okay? So in 10 minutes, you'll know whether or not you can raise $500,000, $1 million, right, to build a new facility, to expand your operation. So I think this is really the most compelling area right now for a lot of businesses. Of course, lending is not the exciting part. The reason that these are crowdfunding platforms is because accredited investors are primarily the money behind this, right? So it's a safe investment for them, right? So it's money for more money. You get peer-to-peer loans. You get the principal and the interest in most cases. The default rate is actually pretty extreme. I say 2 to 4% just to kind of cover the bases, but most numbers you read, it's more on the 2% side. So 98% of these crowdfunded loans get paid back, okay? So as an investor, it's an interesting option for you as far as where to put your money, and you can actually choose who to back, where do I put my money. You can give $25, you can give $25,000, right? But ultimately, you're gonna make the principal plus the interest. Again, it's a way around the banks. There's other ways to evaluate creditworthiness. So this is, as far as filling that funding gap, very compelling. I have a few examples of that. Actually, what I didn't highlight, Cabbage, okay? An interesting, it's crowdfunded on the back end, but for companies, okay, you can raise as much as $100,000, and they have in like 4 minutes, you get approved or not approved, okay? And the interest structure that they have is a bit different, right? So you pay it back over the course of 6 months, okay? So it's really cash flow, okay? I need to order supplies. I need $50,000 now. You get approved. You have that money in your account. You only pay the interest rate on the initial amount that's borrowed or the amount that you actually use. And it's front-weighted on the interest rate, but if you pay it back early, you're actually getting an unbelievable deal, right? But again, ways to keep cash flow in just any traditional business. This is very compelling, I think, for a lot of small businesses today. And like I said, I mean, it's controversial, but if you take away nothing from today, is that you have to be looking at crowdfunding as an option to raise money. And it's not just about, you know, putting $10 million together for a new widget, okay? It could be making sure you have enough dough to make the bagels. So I broke up equity investing into the accredited and then the unaccredited, okay? So in the US, we only know equity investing on the crowdfunding side as accredited investors. Steve did a good job of defining who they are. So when you hear Jobs Act, okay, it's broken into different pieces. The only part that is legal now are certain restrictions have been lifted, enabling accredited investors to not only find, but also invest in directly into companies for a return equity. AngelList is one of the market leaders. They actually facilitate the forming of syndicates, right? So a lead angel investor says, I want to invest in this company. You 20 angels, come and join me. We'll have a common term sheet. I'll manage the due diligence, and we put our money back, right? Hundreds of millions of dollars have been raised this way, okay? It's almost a virtual angel group. Okay, so it's really no different than what has existed. Like I said, for years and years, groups of wealthy individuals who have the ability to invest in companies come together and, you know, combine their resources. Seed Invest is another interesting platform, actually Philly technically, but really a New Jersey company. They went through an accelerator, much like mine, down in Philly called Dream It. So they raised a little bit of money, they funded the campaign, they facilitate over $150 million of investment so far, and they just raised $2.3 million, this is last week, $2.3 million for their own company through their own platform. So talking about eating your own cooking, it's the way to do it. Funders Club, a slightly different model. Accredited investors pool their money into basically a fund. That fund diversifies it over several investments in the startup space. But again, for every model here, there's 3 or 4 other ways to do it. So a lot of different interesting opportunities there. You get a piece of the company, but you only really get paid out at the exit, or some liquidation has to happen in order for you to actually make any money. Average raise is higher. I'm reluctant to even put a number in there because you look at 5 different sources, you'll get 5 different numbers, but generally the business model for a lot of these guys, they take a percentage of what that raise is. Only accredited right now. A lot of the deals that you find on these sites are actually curated by the platforms themselves, which is, as far as controversy goes, that is one of the more controversial options, right? So is the platform making investment recommendations based on who they tell you to invest in? Is it really the crowds deciding what the viable opportunities are? Remains to be seen. On the retail side, this is something that Europe, more than anyone else, is leading the way. Okay, so in the UK particularly, they actually have legal crowdfunding. Okay, anyone in this room, if we were British citizens, we can go and invest directly into companies in a variety of different ways. Seeders, again, they find an investment, they verify, if you will, curate it, and then they say, who wants to be part of our investment into this company? Whereas Crowdcube is, you can buy shares. If you have $100, you can buy $100 worth of equity in any company that's listed on the platform. Okay, so true crowdsourcing, right? Seed Match, one of the bigger players. Again, all of these relative to Kickstarter are blips on the map, but they're really making a lot of the innovation there. Same thing, layers of curation, but it's generally the wisdom of the crowds. Problem is that as much as the EU has stepped up here with some regulations, it varies from country to country. You see some stuff in Australia, a little bit in Singapore and Hong Kong, but it's going to be difficult to really use this as an international fundraising vehicle until there's some consistency on the regulation side. So I say what you need to know. I think it's interesting to know the size of the market, right? $5.1 billion of funding has been raised just last year alone. You can see this is the kind of growth that startups dream of, right? You're talking year over year exponential growth. Most of this is in North America, aka the United States. Most of this is on Kickstarter, but as the equity landscape opens up, more and more funding I think you're going to find there. The industry really continues to grow. Another way of looking at this, I like this chart. All this data, by the way, this company, Mass Solution, kind of the reporting agency of record for the crowdfunding industry, right? So it's good at data as you're going to find. You can pay $500,000 for the reports there. I didn't. I actually got it from a friend of mine, so don't tell them. But I like this just because it shows you the curve. Okay, yes, potential huge market. It's growing rapidly. But the breakdown, okay, you see rewards, about $1.3 billion of this giant pie. Donation, a huge portion of that, but lending right now is the major player in crowdfunding, okay? And it's not just US businesses or wealthy individuals trying to raise a little bit more. This is kind of the platform of choice for third world countries, Africa, peer-to-peer loans, a little bit of money to loan somebody and actually get them paid back because you know them, okay? So this is how the world is now able to do business, especially in ways that they weren't able to before, which I think is the most compelling reason to really support the crowdfunding initiatives. Geographically, I mean, this is from 2012, but it really hasn't changed. North America leads the way. Europe is catching up, but still way behind. That blue is basically Australia, and then the rest of the planet is that little green sliver, okay? So when you figure that, 7/8 of the world is not incorporated into this chart here, the opportunity is really huge, especially as this becomes more ubiquitous. I also like this chart. Again, that green and that yellow, if you combine that, that's 75% of the entire landscape of crowdfunding are projects that are $10,000 and less. Okay, so this is small financing. This is practical financing, as I call it, right? A lot of people raising a little bit of money and getting a lot done as a result. I only put this up there, the breakdown of who raises money. Obviously on the donation side, it's social causes, okay? Business and entrepreneurship, only a piece of the puzzle. In fact, many crowdfunding sites are there simply to support creative projects, theater companies, documentary films, things that they haven't built yet, but they're trying to raise money to see, do people want to see this opportunities, right? So that is a huge core of the market, especially on the reward side right now. So success stories, I will mention a few, but before I do that, I want to talk about what makes a successful crowdfunding campaign. So again, this is completely devoid of, the business has to be sound. You have to have a decent team. You got to build something that people care about. You got to do all of the things that are already very difficult, if not impossible, to really master on the business side. But once you do that, and if you're looking to raise some money, here's some tips to do it. Duration of the campaign should really only be about 30 to 60 days. They say some go, 90, 100 days. The more urgency, the better. Okay, 30 days, I bolded it because that's really where you want to focus. Less is more. Okay, set a minimum goal. We need $10,000. We would like $100,000. Okay, let your backers know that this would get us to the next level, but at the very least, this will get us to our short-term initiatives. The biggest place, and I've read this 1,000 times, talked to people about this. Campaigns fail because the communication is not there, okay? Even with your backers, keep them up to date. How is the campaign going? What have you changed on the product throughout the course of discovering what people really want and getting comments and feedback there? The backers themselves are actually the key to expanding the universe of how many people are funding your campaign, okay? So again, you convince one people and they convince 10 of their friends and colleagues to also support the same campaign. So that concept is essentially important. As you get to the final day, you want to really make a final push and make sure that people know the deadline is coming. Networks are key. Social networks were built for crowdfunding, okay? Spread it to 1,000 people. They click a button. They click another button, and all of a sudden, you just got funding, okay? So it's very low barrier to entry. You're not going to send physical mailers out and canvass an area. You're not going to go on a speaking tour around the country. You could, but ultimately, the networks are in place to really help you do this. And a lot of the funding, especially for the artistic campaigns, come from friends and family, immediate networks. Showing the product is key. Even if you don't have a product, show a sketch of the product, a SolidWorks, a vision of it, show the script, show who's in the production company, whatever it is. This is marketing 101, but it's especially especially important on crowdfunding. Telling a story, again, marketing 101, but people have a lot of opportunities to look at. So unless you appeal to them emotionally and can really capture their imagination, that's really what it's about, getting them excited. It's a marketing platform, don't forget. sell what it is that makes you passionate about this. And then I put this on the bottom, but it's arguably one of the most important points. The successful crowdfunding campaigns generally raise about 30 to 50% of their capital before they even launch. Okay? When I say raise, they get soft commitments or they've already circulated the upcoming crowdfunding campaign to a lot of people in their network. Okay? So marketing beforehand is important and getting momentum so that when you actually click the button, other people see, wow, all right, there's already 30 backers. They believe in this. This is something worth jumping onto. Anyone heard of the Pebble Watch? Okay, this is like the thing that put Kickstarter on the map, right? They were looking to raise $100,000. They raised $10 million. Okay, this was like the first e-watch that is now everyone and their sister has an e-watch now, but didn't really exist in this form until Pebble invented it, if you will, right? Huge support, really a testament to the power of crowdfunding, and this is even on the reward side, okay? So nobody, actually, let me jump to this one. So Oculus Rift is a little bit later, another success story in its own right, not the second highest grossing campaign, but one of the higher grossing campaigns on Kickstarter. Raised $2.5 million, we're only looking for $250,000. This is a virtual reality gaming system, right? You can look around and basically look around. I mean, it's cool, it's interesting. A lot of people, almost 10,000 people thought it was so interesting that they had to be part of it. And what sets this one apart is that it's really one of the earliest exits of crowdfunding. So Facebook liked it so much, they were willing to pay $2 billion to acquire Oculus Rift, okay? So the funding, they raised money at the end of 2012, and already, before even 2 years went by, they sold for $2 billion. So on the controversy side, this is the push for equity crowdfunding right here, okay? Thousands of people who said, well, hold on. I gave my money. I supported your initiative. I didn't get anything from this massive exit. So where's my upside here? So that's really, one of the poster children for equity crowdfunding and why it's really necessary. People want to be part of the windfall profits that are made here. On kind of a smaller scale, this is on, trying to remember the plot. I can't remember if it was Indiegogo or whatnot. He raised just over $10,000 to finish construction on a yoga studio, right? Selling pre-memberships, selling other perks, getting donations from the community, opened the studio. There are thousands of stories just like that. This was actually the campaign. This is our students from Stevens. They built a modular power strip that's going to be controlled by a smartphone. This is a very rudimentary prototype, but they've actually built the thing. They raised $10,000. Small amount of backers, but freshmen in college can do this, right? Anyone can do this. They've won Oscars. I mean, I had changed some of these examples up because a lot of the interesting ones were on the funding side, I think. I mean, people raising $250,000 to open a new facility, to expand into a new market. I mean, I think that's the real opportunity, especially on the debt side. But here, I mean, this girl, they raised $1 million for research into whatever disease it was that she had. All went directly to the family, no fees from the platform, okay? So extremely powerful. Documentary films have actually won Academy Awards. They were crowdfunded to start. So I don't know if anyone reads The Oatmeal. It's like an online comic, but he's somewhat influential. Anyway, he raised, I think the funding goal was about $1 million, but he raised money to build a Nikola Tesla museum somewhere in Connecticut or New York, right? So, I mean, this is the type of scale that people can really raise money even beyond the business side, and that's why it's really so interesting. So, going to finish with the most exciting stuff. It's the president actually signing the Jumpstart Our Business Startup, or startups, however you want to say it. So the Jobs Act was very highly touted. This is going to save our economy. This is going to do for us what legislation hasn't been able to do for decades, yada, yada. Generally, bipartisan support. So when you think about it, it's been over 2 years, okay? It had very lofty aspirations of easing some reporting requirements for companies who were raising money and but weren't the massive companies who were going to be listing on an exchange. One of the most important points is that it allows for general solicitation. So as a private placement, you can actually advertise to the world that, hey, we're raising money and come on and be part of this. You couldn't technically do that before as much as it happened. And there were certain exemptions. I think Steve alluded to a few of them for these smaller categories of companies. But generally, like they tend to do, they punted it to the SEC. Okay, so now we live in this Title II, Title III realm. Okay, so when you hear about crowdfunding, right now accredited investors, this is kind of the portion that went live in September of last year. Okay, so general solicitation, companies can announce their private placements, accredited investors can take part in that, and there are certain reporting requirements. I'm sure that Anson and his team can probably speak more specifically to that. But this is kind of the practical side of what is happening today, okay? There is a verification process in place. I mean, platforms are essentially broker-dealers depending on how they structure themselves, but for the most part, they're broker-dealers, so there is layers of oversight in place, but I don't look at this as the real exciting part of it, right? This is what has existed for decades, okay? Wealthy individuals supporting small up-and-coming companies. What is really disruptive is Title III, and of course, that's what we're waiting on, right? So you talk to several people in the industry. I put question marks because you never know when it's going to actually happen, okay? So they're hopeful for the end of 2014. The SEC published rules, but the rules were so flawed that all of these people said, well, this isn't going to work if you do it this way, okay? This is about opening crowdfunding to everyone in the room, right? So with that, the SEC really has a very difficult job, okay? How do you protect investors without stifling the innovation that was intended to be built by crowdfunding in general? Okay, so that's what's taking so long, but probably won't be till end of 2014, maybe 2015, when the SEC finalizes their rules, hopefully with some changes. And then, of course, FINRA has to get involved, and they have to adapt their own rules. So it's going to get uglier before it gets better, I think. But some of the biggest concerns right now with the legislation, and I've read white papers. I haven't written white papers about this. It's a pretty dry area, but at this point, the way that the SEC has defined how companies have to raise equity crowdfunding, it's almost not worth it unless you're raising significant amounts of capital. And there's even caps to how much you can raise through this platform, right? Some of the examples, I mean, when I say burdensome expenses, if you're raising, $150,000, 30 or 40% of that raise is going to be legal, accounting costs. You have to get independently audited financials, and keep in mind, this might be before you even have a company, right? So you're raising $150,000 to try and build something, but you already have to incur all of these expenses up front. So the real value is not created there. So these are some of the pushes that are trying to be changed, as well as some liability protection for platforms, right? Just because they say this is interesting, if everyone loses their shirt, as is most likely going to happen, you can't sue the platform for telling you it was an interesting opportunity. So just wrapping up, rules need to evolve before equity crowdfunding really will take hold. In the meantime, there are so many other ways that you can leverage the crowds and the investment opportunities that are there. Consolidation is inevitable, so there are hundreds now. Probably within the next 5 years, there will be dozens, right? But established players will take hold, as with any industry. It really is a change. I mean, this is something that is disruptive. I don't think it's going away. I mean, 15 years ago, people said the internet was going to go away. It's a fad. I mean, it is clearly not, right? It's the democratization of fundraising, okay? It is opening it up to whole areas of the world that don't have these opportunities. So it is not going anywhere, so you might as well get used to it. With that, there's going to be plenty of problems. The key is to not run away the second that there's fraud or some sort of horror story about all these investors getting fleeced of their money. Empower. I don't even know why I put that bullet in there. It's power to the people. It is almost utopian in its conception, but at the end of the day, it's still business, right? This is people investing. They want to bring things to light that don't exist, and ultimately, they all want to make money or bring something to the forefront that hasn't ever been. So. A new platform that really enables that. I am generally optimistic about this entire experiment. Like I said, I know there's going to be challenges, but I really see, I've seen companies be successful already. I know there's a huge opportunity, and I think this is going to balloon into a over billion-dollar industry very soon. So if you take nothing away from today, it's that you have to look at what crowdfunding opportunities are out there for you. There are ways that you can do it right now, whether you're researching a new product, whether you're raising money for new facilities, whatever it is, go do a little bit of research, maybe start with the platforms that I've mentioned here, and get your piece of the pie. So with that, thank you very much.